Hey everybody, welcome to my stock trading tips. My name is Andrew, and in my last video I shared with you my 4 principles for trading stocks. One of those principles was that you must set a goal for your trading. Anyway, in today's video I want to focus on looking at trading versus investing. I think it's really important, if you're going to be involved in the stock market, it's really important to know the difference between the two. So let me start with investing. Now, as an investor, you're really interested in a company's story. You're interested in what that company is all about. So let's take Amazon, for example. Amazon is a company that is still headed up by its founder, Jeff Bezos. And so as an investor, you really follow the Amazon story. And you realize that Jeff Bezos is an innovative thinker. You realize that Jeff has surrounded himself with individuals who can actually help execute his vision. Over time, you've seen that Amazon has become profitable. You realize, you might be looking around your neighborhood and you see all your neighbors' houses, many of the houses in the neighborhood, UPS trucks are dropping off Amazon boxes. So you're seeing this story play out. So as an investor, you start thinking to yourself, you know what, this company is thriving, and it doesn't look like it's going to be going away anytime soon. So I'm going to go ahead and I'm going to buy some of the stock. I'm going to buy some of this stock because I think perhaps 10 years from now, 30 years from now, doesn't matter how long, it does matter how long, I'll just say years from now, as an investor, you're thinking the stock that you bought today is going to be worth a whole lot more down the line. And so you go ahead and you buy into that, you buy into Amazon, you buy the stock. You understand as an investor that the stock price is not going to go straight up or down in a straight, smooth line. You realize that the price of the stock is going to fluctuate. It's going to go up and down. But as an investor, you don't care about the day-to-day price fluctuation. You don't care that today it's $50. I'm just using easy dollar amounts because Amazon is close to $1,800 a share right now. But you don't care if any stock, let's say, is $50 today and then it's $49 tomorrow, because your focus is on you have a long-term strategy. Okay, so you're looking perhaps for retirement. Perhaps you want to pass this on to your kids. Perhaps you have bought this stock as an investment for your child's college tuition. Whatever your reason is, you don't care about what happens day to day. The investor will see the price fluctuation in some cases as an opportunity to actually purchase more stock, because the investor will think of it as the stock is on sale. As long as as long as the price drop is not indicative of some bad news that is really going to affect the overall health and well-being of the company itself, an investor will see a 3%, 5%, maybe even a 10% drop as an opportunity to buy more shares at a discounted price. Okay, so that's the investor's mindset. Now, if we switch gears and look at the trader is thinking in a similar way, in that the trader recognizes that the price of the stock is not going to go straight up in a straight, smooth line. The trader realizes that there is price fluctuation. Now, what the trader and the investor both have in common is that they recognize that you can buy the stock at a low price and then you can sell it at a high price. That's the basics. Those are the basics that's the basic premise of making money in the stock market. Making money, period. If you're buying and selling things. So the trader and the investor say, I'm going to buy low and I'm going to sell high. The investor says, I'm gonna buy low and sell high years from now. The trader says, I'm gonna buy low and sell high as soon as possible, as quickly as possible. So that's why you have a day trader who will buy at what he or she thinks is a low price and sell within that day. And maybe the stock only goes up 50 cents or $1 or, whatever. It's just higher than what he or she bought it at, and so the trader will sell it on that same day. Then you have a type of trader known as a swing trader. A swing trader is one who recognizes also that there is price fluctuation, but the swing trader is really focused in on the trends. The swing trader is looking at the fact that even though if you look at a yearly chart, there's a trend. If you look at a yearly chart for Amazon, you can see that it's steadily in an uptrend. But in order to be involved in that uptrend, you have to be involved for a few years. The trader does not care about that. The swing trader in this case. But along the way, there are smaller trends, short-term trends, and the swing trader wants to be involved in that stock as long as the trend is intact. Once the trend starts to break down, typically a swing trader will exit his or her position. Okay? But still, the thinking is the same. I want to buy low, and I want to sell high. Now, the question is, why is it important to know the difference between the two? Well, I think it's important to know the difference because when you enter into a position, whether you're entering in as a trader or an investor, you have to have had a reason for that purchase. Okay, it's going to help you with your decision making. So if I enter into a stock position as an investor, then I'll pay attention. Number one, if I buy a stock at $50 and then it drops to $45, I'm not going to panic. Because I have the mindset of an investor, I may look at it as an opportunity to buy more, like I said earlier. I'm just not going to pay that close attention to the day-to-day price fluctuation. What I will do is pay attention to the story. Is the story remaining intact? So I'll pay attention to when the company reports its earnings, because I want to know, is it making money? That's part of the story that I like, and so I need to have evidence that that part of the story is remaining intact. Is it making investments that will pay off, 5 years from now? If it is, I'm going to stay involved in the stock. That's the investor's mindset. You're really looking to see if the story that got you into the stock is remaining intact. Now, the trader, if you get into a trade, then you're paying more attention to the chart. You're paying more attention to the price action. What may sometimes happen is you get into a trade, it goes against you, so it drops instead of going up, and then you start thinking, well, I'll just hang on to it. And you've never really paid attention to the company's fundamentals. You don't know if the company is actually making money because the trader doesn't really care about that as much as the investor. And so you may find yourself caught in a stock for a company that's not really doing that well. It may be a speculative company. Because as a trader, you're just looking for a bump in the price. Okay? And if you don't get that bump, then you didn't get into it because of a story, so you're kind of at the mercy of the stock itself. You're at the mercy of the stock market. So that's not a position you want to be in. What I would say for me is I get into a stock, I'm looking for a certain, the price to go up by a certain amount, and if that doesn't happen, the price drops, there's a chance I may have to go ahead and take a loss because my intention is not to be involved in this stock for years and years to come. I don't know enough about the company to even feel comfortable about being involved in the stock for years to come. Okay, so that's how I look at the difference between trading and investing, and that's why I look at trading versus investing. There's a saying that basically says you shouldn't fall in love with your stock as a trader, all right, because you just don't know, anything can happen. And if you're not prepared to have your money tied up, so to speak, in a particular stock for a long period of time, then you're a trader, and you need to approach it as a trade. Don't fall in love with it. Cut your losses when it seems like that's the best option, and also if it goes up, if you're a trader, take your money as soon as it makes sense to. Okay, don't switch your trades and make them become investments, and that's pretty much it. So hopefully you got something from this video. If you did, go ahead and like it. If you haven't subscribed to the channel, I definitely ask that you do subscribe. If you have questions, feel free to leave a comment in the comment section. As I always say, I am not an expert. I've just gone through a whole lot of heartache and pain, and I've done a lot of research, and I've taught myself how to trade, and I'm very proud of that. And so I just created this channel to share what I know. I hope it helps, it benefits what you're doing. I just want to add value to what you've got going on. So hopefully you show up for the next video. Take it easy.